What's going on, guys? So it is a beautiful day outside right now, man, but the most beautiful thing about today is I got some more secret sauce for you guys. Yes, I got some more secret sauce that you guys can take advantage of and use within these markets. I know today is Sunday and markets open at 5 p.m. Eastern today, so we're gonna have a great week, I feel like, coming this week. So if you want to know how you can hold your trades, how long you should hold them, whether you're taking profit for 20 pips or you want to catch 100 plus pips and you don't want to miss out on the full move, whatever the case may be, whatever questions that you have. I know a lot of us, we have entry strategies, but maybe some of you guys, you may not have exit strategies. So I'm going to go over all of that in this video, man. So before I get into the good stuff, you guys already know what to do. Make sure you please comment, like, and subscribe. Turn on that notification bell to become a part of my notification, getting to know when I post new videos. And check out my description box, man. I will leave a lot of helpful information for you guys in that box. Check it out. There is affiliate links in there. So if you do use anything in there, it will just help my channel, but you don't have to use them if you don't want to, okay? But other than that, guys, like always, let's get right into the video. All right, guys, so right here we are looking at the United States dollar versus the Japanese yen. So this is this is a pair that I like to trade a lot. It's a very smooth pair. It's going to give you the kind of pips that you want, and on top of that, like, because it's smooth, when I say smooth, it's just how it moves. Like, it's not a lot of choppy consolidation across the higher time frames down to the lower time frames. It's just simply smooth structure. You can kind of see how the moving average is kind of just following along with price in this instance. So it's clean, man. It's clean. But anyway, so the first thing that you want to do when you're trying to understand how long you should hold your trades, like let's say you enter down here, okay? Say you enter down here, and this is a nice daily support level right here. It's holding very well. This was actually not even a break over here. This was actually what you could consider a fake out, because after this daily candle closed like this, the new daily candle formed and it closed back inside this area, really establishing that this area was still holding. Okay, so to consider it being a break, I would say at least 2 or more candles have to close past this area of structure. If not, then we just got faked out. But in this instance, so what you want to do here is you want to go down to the lower time frames, right? So say you go to the lower time frames, you go to the 4-hour chart, and now we know that this area is being held. So after this area, this 4-hour candle closed like this, and I want to go ahead and go into the replay so you guys can see it even more. After this 4-hour candle closed like this, then I would have basically go towards the lower time frames, preferably the 30 and 15, to see if I could find an entry candle confirmation. Okay, so right here we did have an entry candle confirmation right here. This was actually a nice sexy candle right here, where it previously engulfed the previous candle, and then on top of that, it's going in confluence towards that hour candle that's forming in mind. So right here, let's say you get an entry right here, okay, entry right there, and stop loss. You can have a main entry time frame stop loss, which would be right behind this area, or you can have the main time frame stop loss right here. Okay, the choice is yours, depending on what you want to do. So keep that in mind. So we're gonna go with the entry time frame stop loss. Okay, so we got it right there. Now, boom, we got our entry. We've entered into the market. Now, our targets are we're basing it on the 4-hour chart, and I go over this all of the time. Okay, I go over this all the time because in doing so, this is how I'm able to build small accounts, because I know a lot of you guys are trading with small accounts, and even if you can get this down on small accounts, when you get to big accounts, you're going to do some damage. Okay, because patience is everything when you're trading with a small account. Okay, so what I want to do here is either base my targets on the 4-hour and the daily chart, okay, vice versa. Now what I mean by that is this is how it goes. Okay, so first of all, this area was being held. After this candlestick closed, now we just have made a higher low compared to the previous area over here. Now I want to take out my Fibonacci and draw a line from here all the way right here. Okay, So this is how you can trail your stops. Okay, so we technically got in around the 78.6 area because this was the retracement level that was actually tested. And now what we're doing here is we're wanting to wait for price to make a new higher high. So if we play this through, boom, 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 all the way through, price did not hit our stop loss. Thank God. It constantly kept making higher lows in this area. Now if we go down to the hour 1 chart, you can pretty much see what I mean. Price continued to get higher. You could have it to the bottom of this wick all the way through here, and it tested this trend line. That's 1, 2, 3, 4 times. I say at least 3 times is a valid trend line. Okay, 4 or 5, it gets nice, because you know, if it keeps testing it, it means that price is more than likely going to go in your direction. And you know, with more higher lows being formed in this example, which is telling us that there's a lot of buying pressure going into the market. Okay, so definitely keep that in mind. You see how it looks on the 4-hour chart. Okay, so now we want a higher high to form, so we're gonna go ahead and play this through. And this was a nice higher high that formed, and this one as well too. If we got out the line chart, you can see exactly one. We got a higher high, higher low, higher high, and then hopefully a higher low in this area. So what you want to do, you want to drag your Fibonacci right here. Okay, you drag your Fibonacci right here, and now because it's there, you want to have your stop loss behind the 38.2. Every time a new higher high forms, you want to drag your stop loss behind, all the way to the 38.2 mark, because we know if price breaks 38.2 based on our 4-hour bias, then we no longer want to be in the trade. And you can see at this 38.2, we are pocketing at least 50 pips, so this is good. Okay, so then it make that new higher high up here, so you drag it right there, and then you move your stop loss all the way to 38.2 again. Okay, you guys follow what I'm doing. Okay, so we're gonna wait again. Okay, wait again. It didn't hit 38.2, so we are still good for this trade. So we're gonna play it through some more, and then it just made a new higher high based on the 4-hour chart. Okay, so now we've caught all the way up to 38.2 again. Now we've caught 102 pips off the bat. Now we're gonna wait for her to start another one. Okay, she makes another higher high, so we're gonna go up over here, and then we're going to bring the stop loss all the way to 38.2. That's 155 pips that we have just pocketed just by trailing our stop so far. Okay, very, very simplex. Okay, and as she go up some more, she makes that new higher high again. Boom, we move our fib, and then we move our stop loss to 38.2. Now you can see we have literally caught almost 200 pips just by doing this, and this is how you can hold your trade. This is the simplest way to do it. Okay, you can either do this based upon the daily, or you can base it upon the 4-hour, and this is something you just keep on doing. Let's see how it plays out then. And then boom, you see now she's doing the same thing. So the sequence is amazing. All you have to do is catch the very beginning of it. Say you have one entry right here, and then you have another entry right here. Okay, so this is for you guys who want to basically make sure you catch the amount of pips that you want. Okay, whether it's 20 pips, 30 pips, maybe you have one trade for 20, 30 pips right here. Let's say max 30 pips, and then you have another trade that you can just use that method that I just showed you. You use this method for 38.2. Now you're guaranteed 20, 30 pips, and on top of that, you can trail your stops with that 38.2 method. Okay, so this is something that you guys want to consider when you're trying to hold your trades. I tried to make this as simplistic as possible. Try it out for yourself. Back test over the weekend, and then try it out when you are getting into your trades during the week. Okay, now if this is all confusing to you, hop into the demo account first. Practice, and then once you feel comfortable and you have that set entry and exit strategy in mind, then get into the live charts. Okay, but other than that, guys, if you did receive any sort of value from this video, man, make sure you hit that like button, hit that subscribe button. If you want to go further than that, make sure you hit that super thanks button. I appreciate all you guys who have supported me so far, man, and like always, I will see you guys in the next video. Peace.